Okay. So opening balance of cash and cash equivalents plus or minus the receipt and payments of cash and cash equivalents during that year should be equal to the closing balance of the cash and cash equivalents at the end of the year. But in the profit and loss account or in the balance sheet, we don't worry about this change in cash. Last year 5,000 was there. This year 15,000 is there. How it has become 15,000, that we are not worrying about in the balance sheet as well as in the profit and loss account. So we need a certain statement which talks about the change in cash from the opening to closing. Suppose in the opening I had 1 lakh rupee. In the closing I have 1,50,000 rupees. I can't simply say that I have generated 50,000 rupees cash in this particular year. I can't say that. You might have generated 50,000 or you might have generated more than that also, because receipt and payments were not recorded. Okay. So to understand the cash flow from the company and to the company, we need to prepare a separate statement. That statement is called as cash flow statement. Okay. What are the ways in which the company will receive cash? Anybody? The ways in which company can receive cash. What are the possible inflows of cash in the company?
Interest on through sales and interest earnings.
Little louder. I am not able to hear you.
Through sales and interest earnings, sir.
I'm so sorry. You can type it. I'm sorry. I could not get you.
It's it's through the sales.
Yeah. Sales through sales. Okay.
Through sales, and we get IT refund. We get.
Huh?
IT refund, income tax refunds we get.
Through sales, will you get cash? Is it true?
Capital also.
Sorry?
Through the capital, like people can invest, like a share market also. Share market, capital.
Suppose you are buying a share of Infosys today in the share market. Do you think that that is affecting the Infosys cash inflows or outflows? Suppose today, forget about Sunday. Assume that today is Monday. I am buying some 1,000 shares of Infosys. Do you think that that purchase of 1,000 shares, I am paying 1 lakh rupee, that 1 lakh rupee is affecting the cash flow of Infosys? To whom that 1 lakh goes?
Not on that day, but might be the long term, at the end of the business, might be they'll be considering it.
Never. The company is not at all having any connection between you and your fellow investor buying and selling of shares in the market. Once the share is issued in the market by the companies, first time, primary market, IPO, initial public offering, later on the company does not bother about who is having the share. That is what limited liability company and the public limited company. You buy it today, you sell it today, you hold it today. No, that money does not come and affect the company. If that is the case, every day somebody buys the shares of the company, somebody sells the shares of the company. The company needs to take account of all those things. It is never come to the company. You are buyer, I am the seller. It is between you and me. That's all. Company, you buy any kind of shares, any company is equally there. That company is independent of the transaction. Please keep that in mind. Tomorrow, Monday, you are going to just log in your Sharekhan account or any other broking company's account. You are just buying some Wipro company's equity share. Wipro is independent of this transaction. Wipro never even bothers who has bought it and never even knows who bought it. Later on, the buyer name will be inserted in the Wipro's book, that the existing owner name will be removed and your name will be entered in the books of Wipro. That's it. You are becoming a member of the company. Apart from that, the cash inflows and outflows never ever affect the Wipro. So please keep that in mind. Okay, sales, somebody told. Sales. All sales result in cash inflows?
No, sir.
Then only cash sales result in cash inflow. Cash inflow. Right now. Credit sales never bring any cash inflows. Okay, that's one. Any other thing?
Interest earnings.
Sorry?
Interest earnings.
One by one.
Interest earnings, sir.
Interest on?
Interest on private investment.
Interest on loan what you borrowed.
No. How
No.
can we earn interest on loan we borrowed?
Interest on loan,
Interest earned on private investment.
interest on private investment. Okay, that's a rare of rarest case, but of course, you have deposited your money in a bank, excess money today for last 1 year, you are receiving interest. Okay, that is cash inflow, accepted.
Sale of asset. Suppose if you dispose of any asset for
Okay,
employees.
you are
or jobs.
disposing asset for cash. You don't like that asset, it has become absolute. One second. So it has been outdated one. So you are throwing off for a price and you are getting some money. Okay, sale of asset, very good. And even
Profit
in,
earned.
sorry,
Profit earned for the year.
profit earned. Profit earned is a cash inflow. That's the point you have come. Now, very good point. Yes. Is profit earned is a cash inflow?
Yes, sir.
Is that the case? Profit, I mean, loss suffered. That's a cash outflow, you mean to say? Definitely, profit earned is not a cash inflow. I'll tell an simple example. Suppose you bought goods for rupees 10,000 and you are selling the goods to Mr. X for 12,000. Now, what is the profit to you? Quickly. You bought goods for 10,000, you sold it for 12,000. What is the profit now?
2,000.
2,000. But Mr. X has purchased the goods on credit basis. He bought it and he is going to give you later on the 12,000 rupees. Now you tell me the profit on sale or profit earned by the company need not to be always in cash. And definitely it won't be in cash. It will be in some other form. Nobody is coming and giving you some cash. Okay. Even somebody gives you cash that is getting converted into some other item immediately. Suppose the X is giving you the price 12,000 rupees. Immediately you will be paying that money to creditors or to your suppliers to buy some commodities. So profit is not just inflow or loss is not just outflow of cash. Okay. Anything else?
So in suppose
Huh?
if you pay interest on long-term borrowings, if you pay interest on long-term borrowings, and
Okay.
principal
Somebody
amount.
told interest paid, sorry, received, you are telling interest paid.
No,
So
no,
it's
no. Suppose
outflow.
company is paying, yeah, interest outflow, and suppose if you pay partial the principal amount
repayment
of
of loan. Repayment of loan.
repayment of loan.
Accepted. Repayment of loan. Payment of interest on loan. Receipt of interest on deposit. Withdrawing the deposit from the bank. Okay. Selling goods on cash. Anything else?
Selling of scrap.
So that's what he told. No, selling of assets. Okay, selling of scrap also for cash. All right. Accepted. Selling of asset and selling of scrap. So like this, we have so many inflow and outflow of cash in the company. So that we are going to the sources of cash inflow of a business and the way in which the cash was used for different purposes of that business during a particular period of time, namely 1 year, 1st April to 31st March of next year. Okay, so that is what we call it as cash flow statement. In India, we have an accounting body. Okay, ICAI is the professional body in India which specifies, which propounds the various accounting standard to be followed in India. So that defines through accounting standard 3 in this way. So Institute of Chartered Accountant of India issued the accounting standard, which is AS3, related to the preparation of cash flow statement in way back in 1998. But now we followed another regulation, that is Ind AS. We all know we are following the concept of International Financial Reporting Standard. You may get a confusion to treat with one of the items in the balance sheet and profit and loss account from time to time or from place to place or person to person. I might have considered the accrued income. Some other person might have not considered accrued income. So the profit of both the same company prepared by both the persons are different from each other. So to avoid this kind of confusion and to have a logical inference, uniformity in following the principle, we have this concept called International Financial Reporting Standard. Otherwise, a company which is functioning in India cannot go to Europe to attract the investors from Europe, because Indian companies might have prepared the profit and loss account and the balance sheet by following the Indian accounting standard. Okay, they need these Indian accounting standard prepared statement to be converted into their way of preparing it. That becomes a lot of problem. That gives a lot of confusion. So to avoid this, international body, all the countries, majority countries joined together and they formed and they created one accounting standard that is called International Financial Reporting Standard, IFRS. Okay, we are also following it, but we are not blindly following it. Indian companies not following blindly. What they do is they just see how far it can be adapted to Indian situation, so that we converged it in some of the principle. So that principle we call it as IND-AS. We have IND-AS 1, 2, 3, 4 like that. So IND-AS 7 talks about the cash flow statement in India. Okay. Right. Now the cash flow from different activities, or the cash flow by different activities, inflow and outflow of different activities, can be classified into 3 major categories. Now we told so many example for cash inflow and outflow. Say for example, repayment of loan. You did not say one more thing, payment of salary. Of course, it's a cash outflow. Payment of salary, payment of wages, buying some asset. You told selling of asset. I'm just taking the opposite of that. Selling some asset. I mean buying some asset. So all these things can be categorized into 3 major categories, 3 major headings. Any activity of a business will be grouped under any one of these activities, either operating activity, or investing activity, or financing activity. What are these 3 activities mean to us? Operating activities are those activities which are relevant to the day-to-day activities of the company, main business of the company, core activities of the business. Example, purchase of raw material, payment of salary, payment of wages, selling of goods. These are all the example for operating activities. Operating activities. Receiving fees by the university from the students for the course. Which activity it is, operating or investing or financing? First of all, is it inflow or outflow? Receiving fees from the students by the university for the course. What is studying in that university? Is it inflow or outflow for the business?
Inflow and operating activity.
It's an inflow, but inflow of operating activity. Okay, inflow of operating activity. So like that, any business. Suppose there is a business which is dealing with software, payment of salary to the IT professionals, operating activities. Okay, so these are all the classifications in operating activities. Next, investing activity. What is investing activity? Any activity that deals with the creation and decrease of non-current assets. Purchase of building, sale of building, purchase of plant, sale of plant. All these things will come under investing activity. Okay, and last one, financing activity. Financing activity means how do you raise money to your business? How do you raise capital for the business? Or how do you repay such loan raised, such capital raised by the business? Those activities come under financing activity. Any activity which is concerned with the long-term capital and liability of a company, whether increase or decrease, is called as financing activity. Example, issue of equity share. Don't confuse the Infosys example what I told you in the beginning. I told that is not an activity of a business. That's only between the investor. Here, issue of equity means in 1990, when Infosys was coming to public, that time the company might have issued equity shares to the general public first time. In that period of time, nobody was having the equity share because Infosys was not there at all before 1990s. Okay, during 1990s, they're issuing the shares first time to the investor. They're buying the shares. So money comes into the business. So that is called financing activity, cash inflow. Later on, the company will not give back the money to the equity shareholders until the company is alive. Please note that point. If you buy means you are buying the ownership of that company from another owner who is already a owner of the company. Okay. Between the investors only, the buying and selling takes place. Company does not involve any kind of cash inflow and outflow. But this one is very first time the company is issuing equity share, or the company borrows any loan from the bank, or company is issuing any debenture. And opposite, cash outflow, redemption of preference shares. Please understand, equity share cannot be redeemed in general, but preference shares can be redeemed. After 5 years, you can give the money to the owner of the share and you can get back the certificate. That is called redemption, repayment. That is cash outflow of financing activity. And the repayment of loan, payment of interest, all these things are financing activity. Receipt of interest, which activity it is? Receipt of interest by the business.
Operating activity.
Sorry,
Financing.
which one?
Financing.
Financing activity. Is it so? Receiving interest is not a financing activity.
Operating,
If you are
operating.
doing a finance business, then okay. You are doing a finance business, or I'm doing financing. The money lenders are there. No, for them it can be, but we are not talking about that. We are talking about the money invested by the company in outside the business. For that, you are receiving interest. So that can be called as its activity, financing, or investing, or operating. Interest received by
Interesting.
ABC Limited from the bank from its
Interesting.
deposits.
Operating activity.
How come, man? It is operating activity. What is operating? Operating means the regular core business of you. For that, if you spend anything or receive anything, that is operating activity. Here it is interest received. You had some excess money, you deposited into bank. For that, after 6 months or one month or 1 year, you are getting interest. So now it is clear, open secret. It is not a financing activity and not operating activity. We have only one more, that is investment activity. You have invested, the business has invested the money outside the business for interest. Okay.
Sir, one clarity difference
Yeah.
between that investment and financing.
Little louder,
activities,
little louder.
So understand difference between investment and financing. So here investments include purchase of land like that assets, or even loaning out, because there was loan mentioned in financing. So
Investment includes both. You are having some money in
both,
the
okay.
bank, as well as you are investing into plant or machine something.
Okay.
Buying of machine is an investment activity. Opening a fixed deposit account in a bank is also investment activity.
Oh.
Okay. So look at this. This is the format we have to follow to prepare cash flow statement. Opening balance of cash and cash equivalent will be there. How do I know? Last year balance sheet I can check. From there I can see the current assets. Cash and the bank account will be there in the last year bank balance. I will take that and write it here. Then I'll check with all the income statement and the profit and loss balance sheet for 2 years period of time, last year and current year. Then I'll come to know how much is the net cash flow from operating activity. What is net? Total of cash inflow from operating activity minus total of cash outflow from operating activities. The net will be added here. Look at this, I have mentioned 50,000. Then net cash flow from investment activity. Net means both are there. Inflow is there, outflow is there. You are finding out the net. Inflow minus the outflow. That is called net cash flow.
Presentation mode.
Yes.
Can you go to presentation mode? Presentation mode.
I'm not able to get you clearly. Anybody can just to say what is it?
He's asking to share the file.
Yeah. It will be shared.
No, sir.
It is already there.
No, sir. He's asking to move to slideshow mode.
Slideshow mode only it is there. It's not a slideshow.
No.
I don't know, but for me it is showing slideshow only. I'm checking.
We are seeing the smaller screen, sir. So, and the numbers are not full.
Okay. You are not able to read it. Is it small for you?
No, we can read it, but we can see only half page.
Okay. Check it. Now this is not a slideshow, but now I'm making a slideshow only. Now it is slideshow in my laptop. I'll check it. Okay.
Otherwise, you just zoom out a little bit. You can reduce.
Okay, I'll do that. It's visible now.
No, sir, it further zoomed.
You reduce to 90, when 90 or 80. You can reduce to 90 or 80, sir.
Are you able to see now?
So the bottom right window, the bottom right, there's a zoom in percentage. If it is ready to 80,
Yeah, that's what I've done. I've done 140.
No, do it
so we
90,
need to
sir.
reduce it, sir.
Reduce it.
Okay. You are telling it's too much outside the screen.
No, it means we can't able to see the full page. That's what we are saying.
Okay. Now are you able to see the page of cash flow statement?
Sir, if
Perfect.
you make it 80%, it will be visible entire
Okay.
instead of 100. 80 or 70, yeah. Slightly less, sir. Slightly less. 70% if you make.
All right.
Yeah, now it's able to see.
Okay. So from the beginning, we take the opening balance, add the net cash inflow from all these three activities, and finally finding out closing balance of the cash and cash equivalents. Closing balance will be there in the balance sheet of the current year. Last year opening balance, current year closing balance. So that's the matching. Here I have told 1,40,000 now. This 1,40,000 is nothing but 1 lakh plus 50 minus 20 plus 10. Okay. So same amount should be there in the current year balance sheet in the name of cash and cash equivalent. So that says that okay, we have done the cash flow statement correctly. 1 lakh of opening balance of cash flow, opening balance of cash has become 1,40,000 of the closing balance of the cash. Okay, so that is the meaning. But it does not mean that only you have generated 40,000. Look at this. You generated 50,000 in the operating. You lost 20,000 in the investment. And again, you generated 10,000 rupees in the financing activity. So the net effect is 1,40,000. Okay. So this is the format in which we have to prepare the cash flow statement. So before that, I'll just take a few more examples so that you will be comfortable in identifying the items of cash inflow and outflow of three activities. So go with another. Yeah. I'm sharing another Word file. Is it visible? Is the font size and other screen everything is fine?
Yes, sir.
Okay. So look at this. There are some transactions listed here. You are asked to give these. I'm sorry. So you are asked to give reasons to classify the following into cash inflows of operating or financing or investing. Okay. The first one is cash sales of goods in trade. You are selling goods for cash. Which activity it is?
Operating.
Operating activity. Inflow or outflow?
Inflow.
Inflow. Next, cash paid to suppliers for raw materials. This one is
Outflow.
huh?
Outflow.
Operational, but
Operating
outflow.
activities, outflow. Cash payment of salaries and wages to employees. Payment of salaries and wages to employees.
Operating activity.
Operational.
Operating outflow. cash payment to acquire a fixed asset. Say for example, machinery is an
Investment.
example for
Investment.
investment activity, cash
Outflow.
outflow. Next, cash proceeds from issuing shares at a premium. The company is selling the shares at the first time to the general public.
Financing.
It's a cash inflow of financing activity. Payment of dividend,
Cash
What?
outflow.
cash outflow of
Financing activity.
financing activity. Good. Dividend is nothing but distribution of profit to the shareholder. We taken money from him, that is financing activity inflow. Now we are financing it. We are just giving the return to him. So it is outflow of financing activity. Next, interest received on investment.
Inflow on investment activity.
Investment activity.
Investment activity. Okay. Next is interest paid on debentures. We are paying interest on debenture. Debenture means what? The loan taken by the company from the general public. Yes.
Outflow.
Outflow. Okay, but which outflow it is?
Financial.
Financing activity.
Outflow of
Financing activity.
outflow of financing activity. Good. Next, payment of income tax. Payment of income tax.
Operating activity.
Without paying income tax, can't you do your business?
No.
Is it the operating activity? Without paying salary to my staff, I cannot do production. Am I right? Without paying the income tax, can I do the production? Am I? What is income tax actually? Tax on the profit of the company, income of the company, not on sales. Please understand, income tax is nothing but the profit. Tax on profit. Look at this, interest on. Payment of tax. Okay, payment of tax. It is given here operating activity, but it is normally not business activity. Payment of income tax. You are not paying on the purpose of producing anything. On the profit you are paying. Suppose if it is a nowadays it is excise duty. GST. That could be a operating activity. Okay. So this is neither operating nor any other activity. It's a out of profit activity. Okay, but some author, this author has classified into operating activity. Okay, but normally income tax is on tax. Profit. After earning profit only you are calculating income tax. Without income tax, there are so many companies. So many countries. So we cannot just take normal business activity. It's not a normal business activity. Okay. But here it is mentioned like that, but that's opinion. Okay, next. Cash payment of long-term loan. What is this? Cash payment of long-term loan. Cash repayment of long-term loan. Financing activity, cash
Outflow.
outflow. Financing activity, cash outflow. Okay. Next, we look at this. Look at this question. There is a small question given to you. The net income reported in the income statement for the year was rupees 1,10,000. Okay. The depreciation of fixed asset for the year is 44,000. The balance sheet shows the following details about the current assets and current liabilities. Current assets and current liabilities. That is given in the statement. That is cash at the end of the year is 1,30,000. Beginning of the year is 1,40,000. Now what to do in this situation while preparing the cash flow statement with these two amounts? You remember that format? Cash flow statement format I showed you just before. What will you do with these 1,30,000 and 1,40,000? 1,40,000 is the cash inflow, cash available in the beginning of the year, end of the year. And this side 1,40,000 is the cash available at the beginning of the year. So what you do with these two amounts while preparing the cash flow statement? You forget the cash flow statement format just now I showed now in the PPT. What is the first item in the cash flow statement? Starting point of the cash flow statement is
Operating activities.
Okay.
before that.
Cash available.
Cash available in the beginning. So we have to start with 1,40,000 only the cash flow statement if you are going to prepare. And the end of the statement should be having the cash available at the end of the period. That is 1,30,000. How 1,40,000 has become 1,30,000? That is what the cash flow statement is going to explain to us. But the question is not about cash flow statement. The question is asking you to calculate cash flow from operating activities. Only cash flow from operating activities. Okay. So there is a small understanding here. What you have to make is decrease in asset and increase in current asset. Decrease and increase in current asset. Working capital changes is not found in the cash flow statement directly. So what we have to do is, if there is any increase in the current asset of the company, if there is any increase in the current asset of the company, we will have to minus in the cash flow statement under the heading called operating activities. Why? Adding, if there is any reduction in current asset is reducing means you are getting money. Any asset is reducing means what? We are selling it and we are getting money. That is why we are adding. If current liability is increasing, what is current liability? Any money you are receiving from the current liabilities. Okay. If current liability increases means you are getting cash from that particular liability. Okay. A non-current will go to directly the cash flow statement. Okay, increase or decrease. But current will be taken in the abstract, taken in the what you can say, only the summary. Okay. Suppose there are few current assets in the company. Don't worry about cash because cash is the first item. We don't consider that as a current asset in this case because cash is the first starting point of the cash flow statement. Next, debtor is there. Is debtor a current asset or current liability or non-current asset or non-current liability? What is debtor? Last year it was 1,80,000. Current year it is 2 lakhs. So what is debtor actually? Debtor is a current asset or non-current asset? Or liability? Current asset. So current asset is increasing or decreasing from the last year to current year. It was 1,80,000. Now
It's increasing.
2 lakh. It is increasing. So current asset is increasing means we might have purchased something. So there is an application. So we have to minus the amount of increase. Okay. If current asset is increasing in the statement, we have to minus. If current liability is decreasing, we have to minus. Opposite of that, if current asset is decreasing, we have to add it. If current liability is increasing, again we have to add it. The logic is, what will happen to the cash flow? Will it decrease the cash flow or will it increase the cash flow? If it is increasing the cash flow, we are adding. If it is reducing the cash flow, we are reducing, minusing. Okay. So now look at this. There are some items given to you: debtors, inventories, prepaid expenses, accounts payable. Debtor is the current asset. Inventory is a current asset. Prepaid expense is a, what is prepaid expense? Current asset or current liability? Prepaid expense is current liability. Sorry, current asset. Prepaid expenses. Okay. Accounts payable is current liability. So based on this, we are going to prepare the statement showing the operating cash flow from operating activities. Now I have taken decrease in inventory. I have written here decrease in inventory. How much? Decrease in inventory. From 3 lakhs, it has become 2,10,000. So it is 10,000 decrease. Then decrease in prepaid expenses. 1,000 rupees decreasing from 16,000 to 15,000. It is decreasing. So I have taken here decrease. Similarly, increase in current asset. Debtor is increasing from 1,80,000 to 2 lakhs. 20,000 is increasing. 20,000 is increasing. Okay. Similarly, decrease in accounts payable. That's a liability. Accounts payable is a current liability. It was in the beginning 1,16,000. Now it is 1,02,000. So there is a reduction in accounts payable, which is a correct liability. So look at this rule. We have to add when there is a decrease in current asset and there is a increase in current liability. We have to minus if there is any increase in current asset and if there is any decrease in current liability. That I have done here. Look at this particulars. Net profit given in the question. How much net profit given in the question? Net profit. Net profit We don't have profit and loss account here, but in real time, you can have a P&L account statement itself. From there, you can refer. It's only an abstract they have given to you. So 1,10,000 is the profit. That is depreciation of fixed assets for the year 44,000. The net income reported in the income statement for the year was rupees 1,10,000, and there was a depreciation on fixed asset 44,000. Okay. Now we start with the net profit 1,10,000. Why do we add depreciation here? Depreciation is a neither cash inflow nor cash outflow. It's only a book entry. We don't have any expenses to be made in cash for depreciation. But the profit what you found out is already minusing depreciation, so you got a profit of 1,10,000. But really speaking, this 44,000 was not given to anybody. It's only a book entry. Depreciation is not just a book entry. It is not out of pocket expense. We don't give any money to anybody for making an entry called depreciation. So if that is the case, if I have not given money to anybody, my real profit would have been 1,54,000 cash profit. Okay, because depreciation is not a cash expenditure. That is why we are adding back the depreciation 1,54,000. So from that, we are going to do the change in working capital. These are all called change in working capital. Okay, let me just tell you one more thing in this point. In balance sheet, you'll be having a current asset and a non-current asset. Similarly, you'll be having current liability and non-current liability. Non-current items you are directly taking to cash flow statement under the financing activity or investing activity accordingly. But as far as current items, current asset or current liabilities are concerned, we have to treat separately like this to find out the cash flow from operating activity. Okay, so after this, we can just have a plus cash inflow from financing activity and cash inflow from investment activity, you can have it. But only thing is to find out the cash flow from operating activity, the starting point should be profit, and we have to add depreciation, and we have to adjust the working capital changes. What is working capital changes? Increase or decrease of current assets and current liabilities. I repeat again, to prepare a cash flow statement, we need a balance sheet. We need income statement for 2 years or some information about these 2 years from the account and income statement. First point. Second point, when you scan through the balance sheet, you will be coming across 4 items only. One is non-current asset, non-current liability. Another one is short-term liabilities and short-term assets. That means current liability and current assets. The second two, current assets and current liabilities, will be taken to calculate the net cash flow from operating activities. The remaining non-current assets and non-current liabilities will directly come in the profit and loss account. Cash flow statement directly. Okay. So now, what is the increase and decrease? It is given here. This is the rule. So we have already this increase and decrease. We are taking it and bring it in the statement. Decrease in inventory should be added. So 10,000 rupees. Decrease in prepaid expenses. That's another asset we are adding. Increase in debtors. We are minusing it. Decreasing in accounts payable. How do I know this? Through this. What is the logic behind it? If current asset is decreasing, that means inflow is there. Current liability is increasing means we are selling something and we are having inflow. Liability increases, definitely inflow. Asset decreases, definitely inflow. Asset increases means outflow. Liability decreases means you might have paid the liability, so there will be an outflow. That is why we are minusing the increase in current asset and decrease in current liability, and the opposite for that, for the current asset and current liability to add. Okay, based on this, we are adding this. So after adding, we have this net result of 23,000. Already we have 1,54,000. 23,000 is a minus. As per the mathematical symbol here, 34,000 is minus. How do I know that minus? It is given here less. Okay. So minus. Bracket means minus. Or if you want, we can just write the symbol minus. Okay. So 34,000 minus 11,000 plus. So net effect is 23,000 plus. sorry, minus 23,000 minus the 23,000 are minus from 1,54,000 to find out the net cash flow from operating activities. Only this amount you can take to cash flow statement. Okay, when you prepare cash flow statement, you can take only this amount, net effect. You need not show all these things in the cash flow statement. No, sir, I will show it. Okay, no problem. You can show this in the balance, cash flow statement itself. Okay, so after this, what do you do? After this, if you are really preparing a cash flow statement after this, what should we do? We have to take the order, decrease the investment activity, and then we have to do the what is that? Investment activity, and then yes, after investment activity, one more thing is financing activity. For that also we have to take plus minus. If assets are increasing, non-current assets, suppose you are finding last year balance sheet, machinery is 1 lakh. Current year balance sheet, machinery is 1,50,000. So what is the interpretation now? Last year, closing balance of machinery is 1 lakh. Current year closing balance of machinery is 1,50,000. Machinery is a current asset or non-current asset, first of all?
It's a non-current asset.
Non-current asset. Is it increasing or decreasing?
It's increasing.
Increasing. So what is the interpretation? What is the effect? Why non-current asset of machinery will increase? Because of what this asset might have increased? A simple question. Last year I had balance in the name of machine 1 lakh. Current year I had a balance of 1,50,000. What should be the reason?
Because the company has purchased a new machinery.
That's it, simple. Company has purchased. If company has purchased means, is it an inflow or outflow?
It's an outflow.
Outflow. So you will be writing it here, increase in the machinery. If you prepare a full-fledged cash flow statement, we will be writing it here, increase in increase in machinery, 30,000 rupees will come here. Increase, so minus. Suppose machinery was there in 1 lakh, but now it is only 20,000. So what is the meaning? We might have sold 80,000 worth of machinery. So that will come under plus. Cash inflow from sale of machinery, which will come under investment activity. Okay. Likewise for financing activity also. Suppose last year debenture amount is 1 lakh. Last year balance sheet shows that debenture amount is 1 lakh. Current year balance sheet shows that debenture amount is 2 lakhs. Debenture was 1 lakh. Now debenture is 2 lakhs in the balance sheet. So what is the reason why debenture is increasing? What activity it is now? Inflow or outflow? Under what category will take?
It's a financing activity. It's a
increase in debenture. That's a financing activity. Inflow or outflow?
It's inflow.
Inflow. 1 has become 2. So how much you have to take it in the statement? 1 lakh you have to take in the statement. 1 lakh. How much is increasing and how much is decreasing? That you have to take it in the statement for the reason increase in debenture. That means issue of debenture. We have borrowed money. Okay. Suppose last year bank loan was 1 lakh. Current year the bank loan is 20,000. What is the meaning? You are seeing the balance sheet of last year. There was an item in the liability balance sheet, bank loan 1 lakh. Now current year the bank loan is only 20,000.
Outflow of outflow. It has
we
been
might
cleared,
have
80,000.
repaid the loan, right? We might have repaid the loan.
Repaid the loan.
Yeah, so that's an outflow. How much outflow? 80,000 outflow.
80,000.
Which activity it is? Financing activity. So under financing activity, you will write decrease in bank loan 80,000 rupees. Decrease in bank loan means that is minus. We have paid. We have paid it. So our cash flow affected. It was an outflow. Okay. So like this, you have to write all the items under each heading, under 2 headings, investment as well as financing, and you have to find out the last one. Along with this, you may be having one more item, the net item of net cash inflow of investment activity, and one more thing, net cash flow of financing activity. Then this one, okay, and this 3 will be added together according to the sign. You will be getting the closing balance of the cash. That is a full-fledged form of preparing a cash flow statement. Okay, suppose machinery, look at this. Machinery was 75,000. Now it is 84,500. We can consider this as an increase in machinery for 9,000 rupees, right? 9,500. Provided there is no information about the machinery given in the question. If there is an information given about the machinery, then we have to consider that also. We might have depreciated the machinery, or we might have sold, or we might have bought. We have to find out the net effect of it. For that reason, you have to prepare a small ledger account of machinery. If it is there, if it is 2-3 items are there in the machinery, then we may not take a conclusion immediately. 75 has become 84. The difference I can take as a purchase of machinery. We can take because there are so many other items are given in the question. We bought machine, we sold machine, we considered depreciation also. The net effect of this we have to find out, that is 900. So this is how you have to prepare the cash flow statement. Cash flow statement of a company. Okay, any doubt in this? I repeat again. Finally, we are given with 2 balance sheet and 2 P&L account, or the information about these 2 balance sheet and the P&L account to prepare a cash flow statement. Cash flow statement is a tool to analyze the financial statement in order to know the cash inflow and outflow of these 3 activities. So it will start with opening balance of cash. How do I get that? The last year balance sheet, cash balance as well as the bank balance. I will add it together and I will bring it here in the starting point of cash flow statement. Okay, I have shown the other one, PPT. No, I will bring that in the first one, opening balance of cash. Then I will find out the cash flow from operating activity. Otherwise, you can find out the cash flow from operating activities. Then you can bring the opening balance. Last also you can bring the opening balance. Here, you are writing 1 second. Suppose here 1, 2, some 3 items are there in investment activity. Okay. So you'll be writing here net cash flow from investment activity. After that, you'll be writing the financing activity one by one, depending upon the company's data. Financing activities. Okay. Say for example, you have some 3 items. 3 items. 1, 2, 3. Okay, the net of this will be brought here. The net. It will be the inflow or outflow. You have to be very clear about the minus and plus. Net cash flow from financing activity. Financing activities. Financing activities. Now you can bring the cash, opening balance of cash. If you did not bring the first, if you did not bring this opening balance here, you can bring it here also, no problem. Opening balance of cash. Opening balance of cash. Now, please understand what you have done. We have done just addition. What is the net operating cash inflow from operating activity? Okay. Then what is the investment activity cash inflows? This one. And what is the financing activity cash inflow? Net. It can be minus or plus. Please understand this. This answer can be minus or plus. This can be minus 5,000 or it can be plus 5,000, depending upon the amount what we are taking here, depending upon the balance sheet items. Okay. So now we have this opening balance here. Suppose if it is 10,000, opening balance 10,000. This is the net cash flow from operating activities. Operating activities. This is the amount what we are having as net cash flow from investment activities, and this is the amount what we are having as financing activity. Okay. All these things put together should be equal to closing balance. Closing balance. Closing balance of cash and cash equivalents. This will be there in the current year balance sheet. In the asset side, under current assets, you'll be having this amount, or you can just take this addition that should be equal to the amount what is there in the balance sheet. Is it understandable? This is the way in which you have to prepare the cash flow statement. Any doubt? Any doubt in the cash flow statement? Preparation of cash flow statement are the three activities.
So the opening balance of cash should come at the top, or from where did it come?
Opening balance of cash will come from the last year balance sheet. Last year balance sheet closing balance of cash is the current year opening balance. Suppose you are having the balance sheet of 2021. In the current asset side, in the balance sheet, you will be finding the cash and the cash equivalents. You remember the balance sheet last 2 weeks, 3 weeks before you prepared now? In the balance sheet, you will be getting the opening balance. Last year balance sheet will give you the opening balance of cash. Current year balance sheet will give you the closing balance of cash. Or you can find from the totaling also. This would be equal. This amount, and this. If you do all these four, 1, 2, 3, 4, this addition of these four, depending upon the symbol sign, it should be giving you the closing balance. It should be tallying with the closing balance what you are getting in the balance sheet of the current year. Okay, take 10 minutes break, then we can continue. All right.
Yes, sir.
Okay, can we start? Are you there? Anybody can reply?
Yes, sir.
Yes.
Yes,
So,
Professor.
Sorry. Okay, we can start. So in front of you, I'm sharing a Word file. This is comprising of the entire format of cash flow statement, whatever I have explained to you so far theoretically. Okay, so first cash flow from operating activities we are finding out based on the profit and loss of the company, last year profit. Okay, then adding for non-current, non-cash and non-operating items. We have to add those items which are minus from the profit while doing the P&L account, but it is not actually a cash item. Example is depreciation, amortization. That is not a cash item, but it was operating, but it is not actually cash. Say for example, interest, loss on sale of asset, profit on sale of asset are all non-operating but cash items. You might have paid interest. That interest might have been debited in your P&L account, or in your new format, you might have added the finance cost under the expense column. I would like you to recollect the profit and loss account statement of the companies. Few weeks back we have done. So interest might have been added in the finance cost while preparing the profit and loss account statement. But actually interest is not an operating expense. It is a cash expense, no doubt. But it is not an operating expense. Interest is a financing activity. Interest is an item of financing activity. It was already minus to calculate the profit, so we are adding back. Okay. So like that, any items are like that. Yes, sir. If any items are like that in the profit and loss account, you have to do adjustment for that. Adjustment for non-cash and non-operating items. Meaning is non-cash item which was already deducted from the income of the company to find out the profit. Now we are adding it back because such items are non-cash. We are going to find out the real cash flow from operating activity. So is there any expense which was deducted from the income of the company to find out the profit, but which was originally a non-cash item? Such item need to be added back to find out the real cash profit. One example. Second thing is, some of the non-operating expense and income might have been included in the profit and loss account of the company, because the format says like that. You are having finance cost, you are having depreciation, you are having loss on sale of expenses, sale of asset, other expenses. So all these items you are minusing from the total revenue to find out the net profit. But actually, loss on sale of machinery is a loss, no doubt. But such loss is not from operating activity. Your business is not doing a business of buying and selling of assets. Rarely you are scrapping some asset. You don't want that asset, you are scrapping it. On that you are getting some loss. What is loss on sale of asset? How do you get loss on sale of asset? You are selling the asset lesser than the book value. 90,000 is the balance sheet figure for machinery, but you are selling it for only 80,000. So in this case, 10,000 is the loss on sale of machinery. These 10,000 might have been included in the other expenses while doing the profit and loss account. If you include any item in the other expense column while preparing the P&L account, your profit will increase or decrease. Anybody? If I add an item in the other expense column of the profit and loss account, what will be the result of profit and loss? It will be increasing the profit or decrease the profit?
Decrease the profit.
It will be
Decrease the profit.
decreasing the profit. So already profit was decreased because of one non-operating item. So now we have to add back such item, 10,000 rupees. You have to add back with the profit what was found out by the P&L account already to find out the real cash flow from operating activity. Similarly, there may be one more opposite item of this. Profit on sale of asset. Book value of the machine is 80,000, but you are selling it for 90,000. So you are getting 10,000 rupees profit on sale of machinery. These 10,000 would have been taken into other revenue, other income in the profit and loss account, the second item of the profit and loss account. You might have already done it, second item. So that is added with the sale revenue or income from sales. From that, you will get total revenue. Then we'll minus all the expenses. Okay. So if you take one other income, which is not the operating income, what will happen to the profit of the company? If you take one item in the other income, what will happen to the profit? Profit will increase or decrease?
It will increase.
It will
Increase.
increase. So that is not a real one. It is inflated because of non-operating activity. The profit was inflated because of non-operating income. Actually, the profit was inflated. Now to bring down the real cash flow from operating activity, I have to reduce that amount. Already it was included in the profit. Profit was increased, inflated. I will minus that much profit on sale of assets. So these are the various items which we need to be careful about at the time of finding out the profit from operating activities. Okay. After that, whatever we have done so far, that is adjustment for working capital changes, this we already done with numbers. Okay. Next, you will get the net cash flow from operating activities. After that, cash flow from investing activity. Some example I have given here. It will be plus minus. Then the net of this is called net cash flow from investing activities. Then third one is cash flow from financing activity. Some example I have given, financing activity plus minus depending upon the inflow and outflow. The net of this will come here. After that, net increase, the three ABC you can add. Then cash and cash equivalents at the beginning, opening balance. That will be resulting in closing balance. So this is how you have to prepare the cash flow statement of a company based on the profit and loss account and the balance sheet. Any doubt? This file will be there in the LMS. You can see this. Any doubt in cash flow statement? Anybody? At least you are getting what it is actually. Any response? Can you go to the next one? Am I audible?
Yes, sir, you're audible.
Yeah, then tell me some response. Is it okay? Are you have doubt in cash flow statement? You should be knowing what is cash flow, why it is prepared, and again, what are the activities under three major activities. Okay, and then how to calculate cash from operating activity, then how to make a cash flow statement. We are following indirect method. Okay, we already finished the profit and loss account and balance sheet. After that only we will prepare the cash flow statement, not simultaneously. If you do simultaneously, that is called direct method, but we don't do that. Cash flow statement is not a basic financial statement. It's a tool. So we prepare after financial statements are done with. Yes. Any other doubt? Okay, I'll send you one small question in your WhatsApp group. In the you can say class group is there, no? Yes, any reply?
Yes, sir.
Yeah, I'll send one small question. You can just try working out that. I don't know if it is visible or not. Please check it. Is it readable?
No, sir, it's not appearing anything. Nothing is appearing.
It's not readable?
No, WhatsApp message, we have not received anything.
You did not receive?
No, we have not received anything.
No, we received.
Hmm?
We received
Just
that
check
group,
it, just
accounting
check
for
it.
managers group. Yeah.
Yeah, just check it. No, you can take your phone side by side. And there's a balance sheet of a company, it's limited. 2 years balance sheet given, 2001 as well as 2002. 2001 is the last year, 2002 is the current year. That's understanding. They have assets, we have liabilities and equity. And we are given with some additional information. Okay. And we are asked to prepare cash flow statement from the above details. Can you try doing it by taking your hands on?
No, what is the WhatsApp group you have sent, sir? Actually, the EMBA trimester group is there.
Only one is there, no, accounting for managers. The others, please pass it on to the main group if you are not there in the group. I request the.
Yeah, I got it.
Yeah, okay. Fine. So
Help.
I just ask you to read the question for 1 minute. You can just go through the question for a minute. Then I'll try making you to do this by opening the file separately, and I'll try to do it. Try to understand what is given. Problem number 16.4, that you read it. Above that, there is an answer for previous question that we don't want. Problem number 16.4, the balance sheet of X Limited as on 31st March 2001 and 31st March 2002 were as follows. That data you just go through. Assets are there, land and building, plant and machinery, stock, sundry debtors, prepaid expenses, cash at bank. Liabilities are there, share capital, paid account, general reserve, sundry creditors, bills payable, outstanding expense. It was given for 2 years. And there are some additional information. 3 points are there. Rupees 50,000 depreciation has been charged to plant and machinery during the year 2002. And again, point number 2, a piece of machinery was sold for rupees 8,000 during 2002. It had cost rupees 12,000. Depreciation on the machine was 7,000. Okay. Prepare cash flow statement from the above details. Can we start now? Cash flow.
Yeah, we can start.
Yeah, I'll take the format first. Okay. All items need not to be there in a particular company. Okay, it's a format, that's it. I'm sharing a Word file, which may be visible to you now.
I think you need to share your screen. Yeah.
Yeah, sharing is there now. It's
Yes,
available.
now we can see, yes.
Yeah. So cash flow statement of which company? What is the company name? X Limited. Cash flow statement of X
X.
Limited. X Limited. For which year?
31st March,
2002.
For the year
2000.
2002.
2002. Okay, current year 2002. Okay, so what is the profit given in the question? Profit and loss account is there in the balance sheet. We don't have a profit account separately, but there is a profit and loss account in the balance sheet. The closing balance of profit and opening balance of profit is there in the balance sheet. You can see last year closing balance of the profit is 1 lakh. Current year the closing balance is 60,000. If nothing is there, just the company has followed whatever it has to do, then we can easily say that the company has earned a profit of in the current year. How much the company might have earned? If nothing is there, everything remain constant. If that is the case, by looking at these two figures, 1 lakh and 1 lakh 60, what is the interpretation we can give? How much the company has earned the profit in the year 2002? Please reply.
60,000. 60,000.
Simple, simple. I had in the morning 1 lakh, in the evening I have 1 lakh 60. That means inflow of 60,000 rupees. But it is not the case. There are so many inflows and outflows may be there. Regarding that, we have to scan through this document as well as the information given to us. Okay. We will take it cash flow from operating activities. Cash flow from operating activity. First one, cash flow from operating activities. Profit during the year. So if nothing is there, net profit during the year is how much? Now, just now we discussed now how much. If
1 lakh
nothing
60.
is there, only 60,000 rupees is the current year profit. 1 lakh was there. Now 1 lakh 60 is there. So I can just take it is the difference between these two. Difference between these two is 1 lakh 60,000. I mean 60,000 net. Okay. So regarding any other items, adjustment for non-cash and non-operating items. Okay, what are those things are there? Is there any depreciation in this question? There is an indication about depreciation. So what we have to do, we have to prepare a small account. What is the depreciation is on what asset? What are the assets are there which can be charged depreciation?
Plant and machinery.
Plant and machinery is there. The plant and machinery account, I'm just going to prepare roughly. Okay, plant and machinery account, so that I can understand how much profit has, how much depreciation has been charged on plant. A small ledger account. Okay, just a rough ledger account. Ledger account of plant and machinery. Plant and machinery is a asset actually. So asset account always will have which balance? Balance. You remember
Debit balance.
balance?
Debit balance.
Asset account we having a debit balance. Okay, debit balance. So by balance down, how much was the opening balance of the plant and machinery? Look at the balance sheet of the company. How much was the opening balance of the plant and machinery?
5 lakhs. 5 lakhs.
5 lakhs. That is what 2001. That is what opening balance. 5 lakhs. 5 lakhs. Okay. What is the closing balance of the plant and machinery? How do I know
8
closing
lakhs.
balance? Closing balance is nothing but the current year
8 lakhs.
amount. Okay. By balance CD. You remember long back we have done the journal entry and ledger. By balance CD. How much is the amount which is there in the closing balance?
8 lakhs.
8 lakhs. So 5 lakh has become 8 lakh. If you don't have any other information, we can simply assume that this 3 lakh is the increase in plant and machinery. That means purchase of plant. That is what we call it as cash outflow for investing activity. We can take this 3 lakh directly to the cash flow statement in the name of increase in plant. That means purchase of plant under investment activity outflow of 3 lakhs, the difference. But there are some information with regard to plant and machinery is given. So I'm going to check how this 5 has become 8 along with the other activities relating to plant and machinery. Look at the additional information. Point number 1, 50,000 depreciation has been charged to plant and machinery during the year 2002. If you charge depreciation, the value of machine will come down. So by profit and loss account or by depreciation. Because of depreciation, your value of the asset has come down. Depreciation. How much was charged? 50,000 was charged. 50,000. So after charging 50,000 from 5 lakhs, it has been increased to 8 lakhs. But still we have some more information for plant and machinery. You have to check that. What is that? There was a plant sold. Look at the point number 2. A piece of machinery was sold for rupees 8,000. If you sell the machine value will increase or decrease? Machine value will increase or decrease if you sell the machine?
It will decrease. It will decrease.
Decrease. So decrease means credit side. Cash account. I might have received cash. This is nothing but cash inflow from investment activity. This cash. Okay. For how much we are selling? We are selling it for 8,000. We are selling it for 8,000. We are selling it for 8,000. Okay. Next, what is happening in the machinery? Is there any other information relating to machine? Yes, it is given in the same point.
It had cost
Yeah,
12,000
same point.
depreciation.
It was originally costing rupees 12,000 and depreciation on that was 7,000 has been provided. So originally we bought this machine which is sold now for 8,000 for rupees 12,000. We have been using it for some years. Up to now the depreciation on the machine is accumulating to 7,000. So what is the book value of the machine sold? Original value of the machine sold is 12,000 cost price. But the cost price is not the book value today. Over a period of time, we have used the machine. So we have charged depreciation also. The value will decrease. How much it was decreased? The 7,000 was decreased. So what is the book value or depreciated value of the machine sold now? Are you not able to get me? We bought a machine for 12,000. That machine is sold now for 8,000. That's the situation. But the machine which was purchased for 12,000 has been charged, has been provided depreciation of rupees 7,000. Then what will be the depreciated value of that machine?
19,000.
Sorry?
19,000.
Oh, sir. After depreciation, the value of the machine will decrease or increase?
1,000, 8,000 minus 7,000, 1,000.
How it is 1,000? For how much you bought it?
12,000 we bought, 7,000,
For how much you
5,000.
bought it?
12,000 we bought, depreciation
12,000 you bought
7,000,
it.
so
Till now,
5,000.
how much was the depreciation on that machine?
7,000.
7,000. Then what will be the depreciated value? After
5,000.
depreciation, what will be the value? That is what book value.
5,000.
5,000 is the book value. So 5,000 worth of machine, we sold it for how
12,000.
much? How much?
8,000.
8,000. So there is a profit or loss?
Profit of 3,000.
Profit of 3,000. So that need to be entered here. Profit of 3,000 by profit and loss account or by profit on sales. Profit on sale of machine. Okay. How much it is? 3,000. How it is 3,000? Originally 12,000. From that we minus 7,000 rupees of depreciation. Then we sold it for 8,000. 8,000. That is why it is profit. Okay. 8,000. 8,000. Just for your understanding, writing it's not compulsory to write it here. Okay. 8,000 minus 5,000. Okay. Right. Next, what is related to machinery? Is there any other information about or data about the machinery? I don't think so. The question is ending there. So now these both sides should be equal, but it is not equal. Look at this. This credit side, it is how much? 8,58,000. 8,58,000 is there. Debit side, it is not 8,50,000. How much is there? Debit side only. How much is there? Debit side
5,03,000.
5,03,000. So what is the shortage in this side? What is the shortage? What is the shortage?
3 lakh.
3,53,000.
3 lakh 50. 3 lakh. Please tell me. Is it
53.
3 lakh 50,000? 55,000?
55. Yeah.
Yeah. So what will be the reason for this difference? Debit side, there is a difference. If it is a credit side, I can write sales. If it is credit side, it is a purchase only. So I can write to cash. I might have spent for 3,55,000. I might have spent 3,55,000 to buy a new asset. That is why my asset closing balance is 8 lakh. Okay, I write it in the bracket. Purchase of machine. If it is in the right side, if it is in the credit side, I write sale of machine. Okay. So this purchase of machine and this sale of machine, these two will come under which statement? Cash flow statement. Can anyone tell me where this will come? This 8,000 and this 3,55,000. What we do with this 3,55,000? It's a cash outflow or inflow?
Outflow.
Outflow, sir.
Outflow. So we have write it in the investment activity outflow 3,55,000. Okay. Sale of machinery 8,000 rupees. That is inflow. That is inflow. This is outflow. Okay. I just rolled it for you, which need to be taken to cash flow statement. Okay. Now let us go to the cash flow statement. We already started with cash flow statement. 60,000 was the amount starting point. Now depreciation. How much amount on depreciation was charged totally? It is given the question. How much was the depreciation? From this we can understand now. What's the amount of depreciation?
50,000.
How much? 50,000. So this 50,000 will come here. Depreciation is 50,000. 50,000. After that, there is a loss on, profit on depreciation and machine is okay. There is a increase or decrease in the machine value because of gain. That will take separately. Gain means what you should do. If there is a gain on the sale of machine, should be reduced from the net profit or you have to add from the net profit? There is a gain, no. Gain of how much? Profit of 3,000 was there. This 3,000 was already included in this 60,000. That 3,000 is operating gain or no? 3,000 was the gain on sale of machine. Is it operating activity or non-operating activity?
Non-operating activity.
Non-operating. So it was already included in the profit and loss account. So you have to now take it out. We have to now take it out. There is no amortization. So I'm just deleting this column. I mean row. Interest, is there any interest is there? No. Okay. Just yeah. There is a profit on sale of machine is there. Profit on sale of machine. Profit on sale of machine should be minus, because already there was a profit included in the profit and loss account that is worth rupees 3,000. I have to minus it because unnecessarily this profit was added in the P&L account, which is not a operating profit. That's why I'm just minusing it. Okay. Any other item? Depreciation we've taken. Look at the balance sheet. Look at the balance sheet. There is an item called general reserve. Look at the balance sheet in the mobile phone, the picture. General reserve. What was there in the first year? What is that in the next year? It was 163. Now it is 2 lakhs. Now it is 2 lakhs. So what is the difference? General reserve how much? 100 and same one? How much?
Sir, it is 70.
40 plus, 50 and 70. So there is an increase
Sir,
of how much?
20,000.
Increase of 20,000. What is general reserve actually? General reserve is the amount taken from the profit and loss account for the future purpose. But that is also a profit of the current year. After minusing the 20,000 rupees of general reserve, our profit is 60,000 is shown in the balance sheet. So now we are going to find out the original profit. So we have to add that 20,000 rupees here. Plus transfer to general reserve. Transfer to normally it is increase only. We cannot minus the general reserve. It will be increase. Every year it will be increasing only. So how much the difference between the general ledger of last year and current year? 20,000 rupees. Okay. 70 minus 50. 70 minus general ledger. Okay, you're able to follow, right? It's visible.
Yes.
Next, yeah. Next one is current asset and current liability. We have to consider current asset and current liability. Look at the balance sheet in the mobile phone. Current asset. What are the current assets there? Stock,
Land and
sundry
building.
debtors, prepaid expense. These three are the current asset. Of course, cash at bank is a current asset, but it will take separately as opening balance. Okay. So what is the amount in change in working capital? Change in working capital means change in current asset and current liability. Current asset, stock is increasing or decreasing? Stock is decreasing or increasing?
Decreasing. 1 lakh.
Decreasing. So
Earlier it
current
was 1
asset is
lakh.
decreasing. How much decreasing?
25,000.
Yeah, stock was 1 lakh. Now it is 75. So 25,000 decreased. So decrease in current asset, what do you do? Add or minus? Decrease in current asset. Decrease in,
And
yeah, decrease in stock. It should be added. Decrease in stock. Decrease in stock to be added. How much it is? 25,000. All right, 1 lakh minus 75,000. It is 25,000. Yes. Okay. Next item, look at the balance sheet. Next item is in the balance sheet asset side, current asset, prepaid expense. It was 14 and it is 12 now. 14 and 12. So there is a 2,000 rupees increase or decrease? Yes.
It's a decrease.
Yeah, decrease. So we have to add or minus? Yes. We have to add it. Just now in the stock we have witnessed that. So 2,000 rupees. How it is 2,000? 14 to 12. 14,000 plus 1,000. So that is equal to 2,000. After that, any other current asset in the asset side of the balance sheet? Cash at the bank, that will come separately. Okay, cash at the bank. Next, liability side, current liability. Look for the current liability. Sundry creditor is a current liability. Sundry creditor. How much was there and how much is there now? Sundry creditor. 1,63,000 was there.
2
Now it is
lakhs.
2 lakh. It is increasing. How much increasing?
37,000.
37,000 increasing. So increase in creditor. What do you do? Increase in creditors. You have to minus or plus? You have to plus. Increase in creditor. You have to add it. Increase in creditors. How much it is? 1,63,000, 2 lakhs. So 2 lakh minus 1,63,000. 2 lakh minus 1,63,000. Okay, that is equal to 37,000, right? 37,000. Okay. Next item in the balance sheet liability side with regard to current liability. What is there? Bills payable is there. Bills payable. How much it was? 30 it was. Now it is 10. Increase in bills payable. Same logic. Increase in bills payable. Increase in bills payable. Increase in bills payable. What is increase? How much increase? Look at the balance sheet. It was 30. Now it is 40. So 40 minus 30 is equal to 10. Okay. Next one. What else is there? Is there an item? 2, 4, 6. You've taken all the current asset or current liability. The outstanding is there. Outstanding expense is there. One more. Outstanding expense liability, current liability. It was 7,000. Now it is 5,000. It is decreasing. So decrease in outstanding expense. Decrease in outstanding expense. Decrease in outstanding expense. Decrease in outstanding expense. How much it is? Check with this. How much it is? Decrease in outstanding expense. Please respond now. See and tell me. How much it is?
2000. 2000.
2,000. So 7,000 minus 5,000. 1,000 minus 5,000. So 2,000 rupees minus. Okay. Minus 2,000 rupees minus. In bracket.
Professor?
Yeah.
So this particular format, what we are doing, the indirect method, this is totally different from what we saw in that other format in the first half.
Both are
Right?
same. Both are same. What is the difference? Tell me.
Now this already this adjustment of non-current account, which was like all the entries which is there and I already mentioned here. This is not the particular format. Right? This is a format, already a format, right?
Which format I have given you? This format only I have given you.
No, sir. This
Just-
plus depreciation, transfer of GR, profit of sales of asset. So this particular thing, it was already given. It is a normal format which you have to follow for all the cash flow statement, or it is particular this question only.
No, come again. You are telling something format. Which format you are talking about?
So, while starting this particular solution,
Cash flow
this
statement.
cash flow statement. Okay, we had the three particular.
Yeah, I just
types,
deleted whichever is irrelevant for this particular company.
This indirect method, whatever you are teaching right now. Okay.
This is what indirect method. Yeah. I tell you.
Yes. Okay. So this particular format, when you started that resolving the problem, there was like the subtopic, the left hand side, the particulars were already pre-filled. Correct. So that was the format which we have to follow. Right.
Not that form. Actually, that is a format we are creating and giving you to just understand how the cash flow statement to be followed. There is no all item will be there in all the companies. So wherever there is no item in this company, I deleted that. Same format only I'm filling it now. See, it was there in the format given to you. It also there. Everything was there. Just I deleted some of the items which was not there in this particular company. You know, don't worry about the format. You do one thing. Start with cash flow from operating activity. How do I find out the cash flow from operating activity? Start from the profit. Add all those non-cash expenses minus all those non-cash income plus all those non-operating expense and minus all non-operating income. That has been done up to this. Okay, adjustment for non-cash and non-operating items you are doing here. Suppose in this company some more items are there. Sale on building, sale on any other patent or goodwill is there. I will take further. Since it is not there, only 3 items are there. I have taken 3 items.
Okay,
After that, I am going to adjust with the working capital changes.
Okay.
What is the exact out?
This adjustment of extraordinary items.
That I just removed. Why? Here there is no extraordinary item in this question. So I'm going to remove this also. What is extraordinary item? Cash flow before extraordinary item means there may be some loss due to fire. There may be loss due to theft. Okay. Some kind of fine penalized by Government of India for non-payment of any kind of or non-compliance with any kind of legal provisions. Those items, if it is there in the profit loss account, I will adjust that. Suppose there is a loss on stock due to fire, 2,000 rupees. Now that is extraordinary item. Every year we can't expect the fire will be there in the company. And again, fire is loss because of fire is just activity because of the mismanagement of the stock. You might have not taken the insurance, or you might have mishandled the product. Okay, so because of human error, that mistake might have taken place. So such item need to be adjusted. Normally it won't be there, so I will delete it, or if it is there, I will take it. Suppose loss on due to fire, I will add it. If there is any grant received by the company from Government of India, positive side, grant will be added. Might have added already. Now we have to minus it. Grant is not a regular income of the company. Grant is once in a while, and there is also non-operating aspects because of you have a business in SEZ or any some kind of developing zone or something like that. You might have received any grant. If it is there, I will be doing that. Otherwise, I'll just delete this.
So for a normal, so for the person who is starting the cash flow system right now, what is the basic format we have to follow? I mean,
format is profit starting point plus or minus non-cash and non-operating expenses, adjustment for working capital changes. Then again, if there is any extraordinary item, you have to adjust that. You'll be getting the net cash flow from operating activity. That's the format. Three things we need to have a breakup. One is non-cash and non-operating items to be adjusted. Another is working capital changes to be adjusted. Third one is the extraordinary items to be adjusted. Okay. Only these three things need to be added or minus depending upon the case.
Okay, sir. Okay.
The plus minus all these things you will get net cash flow from operating activities.
Okay, sir. Okay.
Is there anything else in the question with regard to operating activity? There's a gain on profit, right? Sorry, gain on sale of machine. How much the company has gained the sale of machine. Sale of machine is not an operating activity. Okay, actually we have done it or not previously. Yeah, already we have done 3,000. It's not required. The 3,000 already taken. Profit on sale of machine. Sale of asset, nothing but machine. In this question, it is machine. Okay. Anything else for adjustment? Outstanding expense you have taken? Yes, outstanding expense you have taken. Bills payable you have taken. Just look at the balance sheet. All the current items are taken or not. That's it. The current items, current liability and current assets have been taken or not. You have to check except the cash and the bank balance. Cash and bank balance will not come here. Okay, what is the net result now? Net result of cash flow from operating activities. Find out this. Net operating cash inflow from operating activities. How much? Can quickly someone calculate and tell me? This increase in bills payable is taken. Yes, we have taken increase in bills payable. Yes, all the items are taken. First you confirm, then you check the total of this.
So 1,99,000.
Yes.
1,99,000.
1,99,000.
Is there any item missing? Check it up. Depreciation we have taken. General reserve we have taken.
Sir, we are missing sundry data, sir.
Okay, sundry data we missed. Okay, sundry data, what was the case? It was 1,40,000. Now it is 1,50,000. 10,000 is increasing. Increase in sundry debtors. So what you have to do? You have to add or less. Increase in sundry debtors. You have to minus. Increase in sundry debtors. You have to minus. Why you are minusing? What is the logic? Increase in sundry debtor means we have given money in the way of selling. So we have invested money in the stock. What he has taken as purchase. So increase in sundry debtors. Sundry debtors. It was actually 1,40,000. Now it has become 1,50,000. So 1,50,000 minus 1,40,000. That's equal to 10,000 rupees less actually. Okay, now we do it.
One lakh 89,000.
1,89,000 is the net result. Plus or minus?
Plus.
Plus 1,89,000 is the net cash flow from operating activities. Now we are going to find out what is the cash flow from investing activities. Look at the question. Investing activity means we have to go with the non-current assets. Non-current asset only we will follow investing activity. Go to the asset side. Land and building, it was 80, now it is 120. So what has happened? It was increasing by 40,000. If it is increasing means, what is the meaning? Please reply. The land and building was increased. That means there is no other information given about land and building. Just it was increasing from
Outflow.
Yeah, from 180,000 to 1,20,000. So 1,20,000 is a current now. It was previously only 80,000. So there is an increase of land and building that is worth rupees 40,000. 40,000. Similarly, plant and machinery. We already done a plant and machinery account. Okay, there is one inflow and there is one outflow in terms of plant and machinery. Look at this question. Look at the workings. This cash. This is a selling. Selling means inflow. This is a purchase. Purchase means outflow. So this is sales. This is purchase. So purchase of machine. How much? 3,50,000. Purchase of machine. Purchase of machine. Yeah. Purchase of machine. Purchase of machine. You have to less or add. Purchase. Purchase of machine is to be minus because it's an outflow. Outflow of investing activity. How much it was? 3,55,000. 3,55,000. 3,55,000 minus. Okay. And then there is one more item in the same plant and machinery. There is sale of plant and machinery. So I'll take one more line. Sale means addition. We are getting money. Inflow. Sale of machine. How much it is? Sale of machine was for how much? Sale of machine how much? You have to follow. 8,000 rupees is sold.
8,000.
Yeah, 8,000 rupees is sold. Okay, that is plus actually plus. Anything else is there? Sale of machine. After that, in the asset side, no, there are only two assets, non-current assets. Come to liability side. Come to liability side. Liability side. Share capital was 5 lakh. Now it is 7 lakh. There is an increase in share capital. Increase in share capital means there was an issue of share capital. Issue of share capital. Okay. So before that, we confirm these only 3 items means we can conclude this. How much will be the net effect? How much will be the net effect? How much net effect of this? Net effect. Net inflow or net cash flow from investing activity. 3,55,000. That is minus. 8,000 is minus. 40,000 is also. Sorry, 8,000 is plus. 40,000 is minus. What's the net result?
3,87,000.
3,87,000.
87,000.
87,000 is it minus or plus?
Minus.
Minus. 3,87,000 is a minus amount. What we are getting as net cash flow from investing activities. Okay. This I will write it in the next line. This is already written, no? I'm writing it here. Okay. Next, cash flow from financing activity. Financing means you have to look for the liability side, non-current liability, long-term liability. So look at the liability and the capital side of the balance sheet. Share capital was 5 lakh, now it is 7 lakh. The meaning is issue of equity shares. Issue of equity shares. How much it was issued? 7 lakh minus 5 lakh. That means 2 lakh rupees. The company has issued fresh capital. It's a fresh issue. Follow on public offer. The company need of money, so they raised a new capital, 2 lakhs. Next, any other liability, non-current liability in the balance sheet? Everything we have taken already. Okay. So the net result of this is only one item. Only one item. So this is not required. I'm just deleting it. Okay. So net cash flow from financing activity will be only 2 lakhs. Only 2 lakhs. It is inflow. So it is plus. Okay. If there is any other preference share, debenture, anything is there in the balance sheet, I will consider that also either plus or minus. Suppose assume there is one more item in the liability side of the balance sheet. Debentures. Last year it was 5 lakhs. Current year it is 8 lakhs. So what I will do here? Debenture was given in the liability side. Last year 5 lakhs. Current year 8 lakhs. So how do I treat that in the cash flow statement of the company? Please respond now. Okay, bank loan last year was 5 lakh, current year it is 8 lakhs. How do you do it? In the liability side, bank loan last year 5 lakhs, current year it is 8 lakhs. How do you do
Yeah,
it?
we have to add it's inflow of money.
Sorry?
It's inflow of money.
It's an inflow. How much? 3 lakh rupee inflow of financing activities. So I'll add one more line here and I'll be adding that also. Okay, I'll be adding here. That's it. Okay. So net cash flow from financing activities 2 lakhs plus. Okay, now net increase or decrease in cash flows. A, B, C. A plus B plus C. A plus, this is A. And this is B. This is C. What the net result of this? 1,89,000 minus 3,87,000 plus 2 lakhs. How much it means?
I think it's 1,96,000.
How much, sir?
I think it's 1,96,000.
1,96,000. How it is 1,96,000? Just a plus minus. Please do it carefully.
$2,000.
Yes.
Yeah,
2,000.
2,000.
2,000 rupees. Plus or minus?
Plus.
What is that called? Net increase or decrease in cash flow of all the 3 activities. Okay. With this, we have to add the opening balance of cash. Look at the balance sheet. How much is the opening balance of cash given in the question? Cash at the bank last year was 16,000.
16,000.
16,000 was the opening balance, beginning of the year.
2021.
Okay. Then 16 plus 2 is equal to?
18,000.
Look at the balance sheet of the company for the current year. How much is the balance in cash at the bank?
18,000.
18,000. So this is what we have to prepare cash flow statement. This is how, and we have to prove that cash balance of 16,000 has become 18,000 because of these many reasons. And why do we prepare this? We have to be worried about this amount. How much is the operating profit we earned, net cash flow from operating activity? This should be more in the company so that we can say the company is doing well. Cash flow from operating activity. It cannot sell asset and keep cash, saying that I'm having good cash. But that good cash is not really good cash because you sold an asset. If you keep on selling the asset like that, one fine morning, you won't have any asset. So we have to generate cash. We have to generate amount only from or mainly from operating activities. Of course, sometimes you may be generating sale of securities. If you're a new company, cash flow from financing activity may be more. That means you are expanding. You are expanding. That's the meaning. You are expanding. Okay. So this is what the cash flow statement. Any doubt in this cash flow statement? Just one question you have done, and I have given you a few workings separately you have done before the break. This is a comprehensive question on cash flow statement of a company. Conclusion, you have to start with the cash flow statement by the net profit plus or minus the non-cash and non-operating items then adjustment for working capital changes and adjustment for extraordinary item equity is there. That will be giving you the net cash flow from operating activity. Then you have to look for the balance sheet for the investment activities. Non-current assets you have to scan, you have to go through. If there is an increase in non-current asset, it is an application of money, that means cash outflow. If there is any decrease in non-current asset, that is inflow of investment activity. Provided you have to see the adjustment also. If there is any depreciation, other items are given just like in this question, plant and machinery. Okay. Then last one, you have to look at the non-current liabilities in order to fill the items of net cash flow from financing activity. If liability increases, that is inflow. If liability decreases, that is outflow. Then net result you have to bring. All the three you have to add it depending upon the sign. That is going to be the net cash flow from all the three activities. With that, you have to add the opening balance of cash flow of the balance sheet. You will be getting the closing balance of cash flow of the balance sheet. That's it. Any doubt?
Sir, here cash in the bank and last whatever we got 18,000, both are matching here. So
Yeah.
that is what we have to get at the end.
Yes. You have to get the same amount. What is there in
So
the
in
balance sheet.
case the question doesn't have that one, like a cash in the bank, it will be
Question
there
will be
in
having,
all
no,
the
if
questions.
you have two balance sheet, no. Two balance sheet is there. You will be definitely having.
Okay. So now in this question it
If
is there.
not,
Other
don't
questions.
worry. 1 second.
Okay.
If not, don't worry. Whatever you're getting, write it. Suppose in
Okay.
case anything like that, I don't know. But if it is not there, don't worry.
Okay.
Whatever you're getting, write it.
So at the end, we have to match what is mentioned cash at bank and whatever we are getting cash equivalents at the end of the period here. So both should be matched.
We are proving that the
Okay.
16,000 rupees of the opening balance of cash at the bank has become 18,000 rupees of the cash at the
18,000.
bank at the closing.
Okay.
Through these
Okay.
many ways of the business activities of operating, financing, and investing. That's it.
Okay.
So,
Yeah. Suppose, 1 second. Suppose you are going to invest some money in the business. This business is going to be expanded. You are going to ask money from some of the investors. That time they will be looking at this figure. Operating activities, how much money generated. This figure will be taken as a base figure, and they will be evaluating the new project, whether the new project can be generate this much of amount over a period of time, how many years. So that you study the next semester in the corporate finance. Free cash flow. Okay. That is financial management. Now we are just doing the analysis of the statement, analysis of data. Because of the financial management, this is the effect. The balance sheet is the outcome of the financial management of a company. Accountant is just recording all those transactions which are the outcome of, which are the result of the financial manager. Okay. So after that, the financial manager is interested in knowing what are the effect of such kind of decision what he has taken. Okay, that is the next stage. You will study in the next semester in the subject called financial management or corporate finance. Yeah, somebody is asking about to ask something.
no, this sheet is the complete sheet. We can't able to see. Can you please reduce the size so that we can more note some points? The sheet.
Okay.
Yes, sir.
Right. Anything else? Any other doubt? Okay, for the next half an hour. Okay, I'm not going to tell you anything. I'm just giving you some video clippings in your group. You just watch that on the next chapter. That is cash flow statement. Sorry, cost accounting. Okay, cost accounting, cost sheet. Okay.
Please
Another
scroll
5
down to
minutes.
the sheet.
If you have any doubt or any other thing to ask, you can ask.
So this sheet, please scroll down, sir.
Sorry.
The sheet, please scroll down. The further the next. Yeah, fine. That's it.
Professor, like even the cost accounting is also in the syllabus.
Even cost accounting is? I don't understand. Please come again.
No, the syllabus is over by now, or we have further classes?
Oh my God, you are worried about the classes over or not? I think we still have no other subject. It is over.
Yes. OTS is over.
think I missed only one last week that I have taken now, compensation, but I don't think so. We have completed. We have one more. We need one more class. Cost accounting and break-even point is there. That's why I'm just holding. We'll take in next class. If we take now also, we can't understand both together. We have to take. So if I take now cost sheet, then later I have to refer that. Then we may be forgetting. So one more class, we just join. I'll request these people to allocate. Then we will finish it. And again, we have to talk about how the exam and other things. I have to give you some input now. We have to take another one session compulsorily. Or is there any indication given by the university that today should be the last one? Any such kind of? I don't think so.
OT and MM has finished the syllabus, they told. And
Sorry, this is the last class.
HRM and US will be having, sir. OT and
Okay,
MM
burden
has
with me,
finished.
one more class you just join.
Okay,
Okay, finish it because that may be for one 10-mark question. So, and we should also have a comfortable closing of the semester. We should not have this chapter is not done or that is not done like that. I don't want. So please burden with me one more session or maybe 2 hours we can complete it if possible. I'll talk to Professor Rajan and get it done. Yeah, apart from that, one cash flow question definitely you can expect. Full cash flow. One profit and loss account question and balance sheet.
Similar kind of problem, sir, like cash flow, what you have said now.
Yeah. Balance sheet will be given to you and you have to solve the, you have to prepare a cash flow statement.
So solved questions, any model questions will be there for this cash flow statements?
I don't have any soft copy. You can take any ICAI material. There is an Institute of Cost and Management, Institute of Chartered Accountant of India. Let me try ICAI. Here you can download the material. We normally use that.
Like for ratio analysis, we have shared the word file which had been.
Yes. For other subject you're talking about.
No, sir. Yes, for yours, our subject. Okay, for yes, for financial statement you gave a material for cash ratio analysis. Also we have
LMS, no, already we have a lot of questions solved in a statement that is given in the LMS, no?
Okay, we have cash flow statements also available in LMS.
I think so. Check it. Otherwise, you let me know. I will upload.
Okay, sir.
Because last year we uploaded for all.
Okay, we'll check once.
Yeah, check it and tell me. So whenever you come across any material for cash flow statement, that just concentrate on indirect method. Some books they might have done on both. You do it only AS3, that is indirect method. Can you see my screen? This is the URL. You can just take it. You can download this and you can use it for cash flow statement reference.
So if possible, can you share the link in WhatsApp, sir?
No, I just put it in chat box. The link, PDF link was given in chat box of this class. You can take from there. Don't do with any direct method, do it only indirect method. Okay. Just 2-3 questions in the beginning you do it. That may be a little what you can say advanced for all the company, all the type of business. You see, if you are treating interest received in one company, the same thing will be treated oppositely in other company. What I mean to say, in the previous question or when we are discussing, I asked you interest received, what kind of activity it is? You only told us, somebody told interest received on deposit. Which activity it is? Hurry, please come on. Interest received on deposits by the company.
It's a financing activity.
Financing. How, man?
Investment.
Then only 3 are there. You can tell the other 2. Yes, it is investment activity. Okay. But if your company is a finance company, you are a bank, assume you are a bank. For the bank, interest received is interest on loan. Interest received on the loan is a
Operation.
operating activity, right? So in this document, such kind of question also might have done, but you don't worry about those questions. You do only the normal general companies, manufacturing companies. Okay. 3-4 questions you just work out and make yourself comfortable in the cash flow. Anything else? Okay, if you don't have anything else to discuss right now, we can just wind up as of now, and we will intimate you one more short class. We will finish that 2 topics. Okay.
So when that class would likely
Yes,
to
sir.
happen, sir?
Yes.
When that class would likely to happen?
Maybe immediately next week. No, I'll discuss with Professor Rajan and tell you.
Exams are.
Yeah, actually, we
from
need a little
12th.
more time. Normally, they will give 1 hour, one session extra. I mean, 1 session more in comparison to other courses, because we have some numbers and I have to discuss with you more. You may not be first instance not understanding immediately like that. So that process is there. No, don't worry, but you have to spare some more class with me and we can close it. Those who are not in that accounting for manager group, please join there and make some kind of discussion over there. Discussion. You can come across. Now you might have come across the balance sheet of a company for your assignment. All the items you may not be comfortable with. Many items we may not discuss in the class, but that may be there in the balance sheet of the company real time. But nobody asked about that. So what is this? There is an item in the balance sheet. In the group we put it means anybody knows they will answer. Otherwise, I may be trying to answer. That kind of discussion we have to take it for. For that only I have told you to have a group, but that is highly inactive and only 2-3 informations you are asking from me that is coming in there. Please make use of that discussion. On the go, you will come across a word, just to put it there. Don't hesitate, sir, I don't know this, or anybody can explain what it is. Like that. Terminology, because all those terminology you are going to use it in the next semester. You are not going to keep away yourself from the accounting. Next year, continuation of this, there will be financial management. Of course, there are more of mathematics, but all data you have to get it from accounting only. So terminologies are very, very important. All right, so that's it for today. Thank you so much for joining and see you in the next session. If you don't have any other doubt or any other things to ask or say, I'll just wind up the meeting. Is that fine for you?
So thank you, sir.
Thank you, sir. Thank you, Professor.
Thank you. Bye bye.
Thank you.
Thank you.